Chinese President Xi Jinping says the country's GDP grew around 5% in 2024, signalling the world's second largest economy is on track to meet its official target, despite a year of economic uncertainty. The US Treasury Department says it was hacked by a Chinese state-sponsored actor, describing the event as a major cybersecurity incident. China denies the allegations. Plus, Europe is set for a colder than usual January, boosting demand for natural gas just as the continent confronts the end of a Ukraine-Russia pipeline transit deal. Welcome to the programme, everybody. Let's have a look at where we are positioned on US futures, because, yes, we're trading here in Europe, really quite flat across European equity markets right now. The US futures picture looks slightly negative, down 0.2% on NASDAQ futures. All eyes on how the Mag 7 will close out. 2024 has been such a good year, of course, for tech stocks stateside, despite the volatility. Let's move on to a snapshot of some other assets for you as we bring this year to a close. The dollar index is pretty stable this morning. Brent crude is up by 0.8%. That's actually lifting some of the energy names this morning. Bitcoin up 2%, but still well below the $100,000 mark that it reached with great fanfare a little earlier on this year. And gold, it's been a good year for gold, up by 0.4% this morning as we continue to track the precious metal. Let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Anna Edwards in for Francine Lacqua this morning in London. The US Treasury says a Chinese state-backed hacker gained access to workstations and unclassified documents earlier this month. The hack happened through a third-party provider, Beyond Trust, which also does work for the Defense and Justice Departments. China has disputed the claims. Joining us now is Bloomberg's Jill Desis, I think, who is with us to talk about this. Apologies, it is Bill Ferries who is with us. Talk us through what we know about what's happened here. Apologies, Bill, you are reliably here with us to talk about this story. So what do we know about what's happened here?
Well, thanks for having me. Yeah, so what we know so far is that Treasury was informed on December 8th by this third-party provider, Beyond Trust, that there had been a hack that was eventually traced to a Chinese state-sponsored hacking group. It appears that they got access to kind of a cloud services software program that allowed them to, that's normally providing technical support to Treasury workers. It allowed them to have access to some workstations at Treasury Department to read some unclassified documents. But in the end, it doesn't seem so far, at least, to be kind of a worst case scenario that you would face with a typical Chinese hacking story. It's still under investigation by the U.S. intelligence agencies and the FBI, among others. But they have shut down these systems and blocked further access.
OK, so that's where we've got to. I mean, clearly China denies this, as we said in our headline. Where does this leave U.S.-China relations?
Well, it is part of a pattern that we've seen of the U.S. accusing China of a range of state-sponsored hacking of both government institutions and the private sector. The Biden administration has pushed back on this. Where it leaves the Trump administration, we'll have to see. There's a number of very hawkish on China advisors coming into the Trump administration. That said, the president has always or frequently looked for a way to make a deal when needed with China. It's going to be a tense relationship at the start, and it's just we don't know how far the President-elect Trump will want to take his retribution for this kind of action after he takes office on January 20th.
Bill, thank you very much. Senior Editor Bill Ferries with the latest on that hack at the US Treasury. Now, Jill Desis is going to be with us to talk about China, so let's go to that conversation next. President Xi Jinping says China's economy grew about 5% in 2024. That's according to the official Xinhua news agency. For more, let's bring in Bloomberg's Jill Desis. I was very excited, obviously, to speak to you, Jill. So was anything that we heard from Xi Jinping a surprise? Because there have been a lot of people focused on the scale of the growth, whether and when we would hear about it as well.
Yeah, that's right, Anna. I wouldn't say that the actual number is too surprising, though it does kind of indicate how far we've actually come this year. Most economists now think that China's economy is going to grow around 4.8% for 2024, so that's pretty much bang on with that target of around 5%, so it does fall in line with what President Xi is saying. All that being said, way back in March when this growth target was initially set, you had some people calling it effectively a target without a plan. There was a lot of concern about whether or not China would actually be able to make that number. And it really wasn't until we started to see, this whole giant stimulus push around September, where you saw a bunch of announcements from the People's Bank of China. You had some other, stimulus efforts to kind of try to boost demand, that it really did seem like this number was going to actually start getting traction. The other thing, though, is that, it's a bit of a surprise that Xi Jinping would kind of front run this at the end of the year. You usually don't get this number until, sometime in January when those figures are actually finalized. But it does kind of track with last year, actually, when his premier, his number two, Li Chang, kind of did the same thing and front ran the numbers. So when China has good news, it seems like, they're kind of in a mood to push it out a bit early.
Okay, so they wanted to get out there, and with that positive number. More positive news flow coming for government workers in China. We're reporting that significant pay rises have been awarded to some. What more do we know?
Yeah, this one is actually pretty fascinating. So it appears we're hearing from people familiar that that government workers have gotten pay rises somewhere in the neighborhood of around a 5% or so pay rise. It's kind of salary dependent. For some people, that amounts to about 500 yuan or around $70 worth of pay rises a month. And it seems like a lot of these pay raises were actually backdated. So they go back to July, which means a bunch of people just got a pretty big chunk of change thrown into their bank accounts right ahead of the Lunar New Year holiday at the end of next month. So it does seem like this is a way that the government is trying to sort of gin up some more spending activity. As we know, consumer spending activity has been, a big drag on the economy. So maybe an effort to kind of boost some spending activity there.
Yes, I wonder what the latest PMI data out of China tell us about the state of the economy. The services sector not doing too bad, but construction being one of the areas of brightness as well, whereas manufacturing struggling a little. What stood out to you?
Yeah, we did see. So the lift on the services activity headline figure seemed to mostly come from construction. That's a lot of projects kind of, getting done again, sort of ahead of the Lunar New Year holiday at the end of January. So maybe that's what you're seeing there. I will say that while that factory activity was pretty weak, I did find it interesting that new orders were ticking up a bit. That maybe just a bit of a lot of people trying to sort of, front load orders ahead of any expected tariffs from Trump. So I think that that's going to be a really, really key one to watch. We've already heard over the last, several weeks that manufacturers kind of worldwide are trying to figure out how to get ahead of any, prospective new levies introduced by, soon-to-be President Trump. So maybe that's something that you're actually seeing reflected in some of that activity that we just got out of China here.
Yeah, and thinking about next year, Jill, we'll be waiting to see what details we get around fiscal policy and monetary policy. I know Bloomberg Economics saying they still expect to see cuts to interest rates and to other policy tools of a monetary nature to try and stimulate the economy.
Yeah, that's right. I mean, I think that, one of the big things that markets at least have really enjoyed about this year is actually how transparent the People's Bank of China Governor Pen Gongsheng has actually been with sort of announcing that stuff. You'll recall there was a pretty big boost to markets after his press conference this fall where he was talking about making additional interest rate cuts, future cuts to the reserve requirement ratio for banks. And so that does seem to be something that, China still wants to do. Of course, we still haven't seen anything like, the giant bazooka stimulus measure, it announced in the wake of the Great Recession. But China does seem to be willing to loosen policy. They did just change, actually, some of their language a few weeks ago around, wanting looser monetary policies. So I think that in particular is going to be a big thing to watch for 2025.
Thank you very much, Jill. Bloomberg News Desk Editor Jill Decis. Thank you very much for that. Let's get to some of the other news stories that you need to be aware of this morning. Russia and Ukraine exchanged a total of more than 300 prisoners in the first swap in over 2 months. Kyiv brought home 189 of its citizens, according to a Telegram post from President Volodymyr Zelensky, while the Russian Defense Ministry said both sides returned 150 prisoners. Zelensky did not comment on the number of Russians released. Mediated by the United Arab Emirates, it marks one of the biggest prisoner swaps since the start of the war. The German Chancellor Olaf Scholz and his deputy Robert Habeck used their New Year addresses to criticise Elon Musk over his support for the country's far-right AfD party. Musk has praised the party on social media and in an opinion piece, while Scholz and Habeck have accused the world's richest person of trying to undermine European regulations and democracy. And it's now Sir Noel Quinn. Former HSBC CEO Noel Quinn was knighted in the UK's New Year Honours List. Quinn's 5-year tenure as head of Europe's biggest bank came to an end in September. Other honorees include Warren East, the ex-Rolls-Royce boss, who led the company for 7 years until the end of 2022, London Mayor Sadiq Khan, and former England men's football team manager Gareth Southgate, who guided the team to the European Championship finals this year, were also on the list. Coming up, global stocks are set for their first quarter in the red this year. We'll take stock of stocks and the uncertainties heading into 2025. This is Bloomberg. Welcome back. This is The Pulse. I'm Anna Edwards in for Francine Lacqua this morning here in London. Now, global stocks struggled for direction on the last trading day of 2024. You currently see that happening on your screens, heading for their first quarterly loss this year after a weak showing on Wall Street. I'm now pleased to be joined by John Plassard, who's Senior Investment Specialist at Mirabaud, to give us end-of-year thoughts and to look ahead to 2025. We really do appreciate you joining us here on this New Year's Eve then, John. Thank you so much for your time. Looking at what we've managed to achieve in terms of stocks over in the United States, certainly the outcome looks pretty positive. The Nasdaq up by 29.8%, S&P 500 up by 24% or so, and of course nothing in Europe comes close to those. Really, you can look to some of the markets and get pretty decent gains, but not overall. Do you see any signs that rally in US stocks, having come so far in 2024, stalls into 25?
Not really, Anna. Good morning. Because I think we have four certain arguments about the U.S. is the fact that if you look at the company, they have a robust earning growth. You have sustained domestic demand and strong performance in tech and large cap, and we might have the same with the small cap as well. On the monetary policy, we still have support, even if the Fed will cut their rates 2 or 3 times compared to the ECB, that will be more close to 4 to 5. And we have that fiscal stimulus, this fiscal stimulus that the China, you were talking about China just before, need so much. So we'll have tax cut. We expect tax cut. And business-friendly Donald Trump. And the last argument for the U.S. next year is, of course, innovation leadership compared to Europe, for example.
And some of the Russell measures of smaller businesses, John, have also done pretty well in the United States. Would you expect, though, that move away from mega caps and the benefits to be spread into the smaller caps in the U.S.? Is that a story that continues next year?
Yeah, maybe more diversification, because you just said it before, plus 29% for the Nasdaq. I don't think we're going to reach that level in 2025. So more focus on the small and mid caps. We saw that on Mr. Trump's first mandate. It was the place to be, if I can say. And that will be the same. I think they will, of course, benefit from the fiscal measures and the growth boom. If you compare growth coming from out of the U.S. between 2.5 to 3% in 2025, compared to the 0% or 0.4% expected in Germany, I mean, there is no other place to be. But of course, there are some headwinds.
Yes, and I want to ask you about the French market, because there does seem to have been substantial underperformance in French stocks. Part of that might be political instability, part of it the Chinese story and the fact that demand for luxury goods there, of which France does so well, it has not been what it could have been. Would you expect France to continue to underperform, John?
Not yes, of course. So the headwinds are so big. We know that, of course, Hermes, LVMH, and Kering are really depending on the Chinese growth that will be on the 5% next year. We know that the political issue is also another problem for the CAC 40. But at some point, the discount, we had such a big discount on Europe. And especially on France, that could reverse. So I will be more diversified, if I could say that. And there are several stars that could be aligned in 2025, talking about France, but also Europe, maybe, and I hope so, a ceasefire between Ukraine and Russia that will boost investor confidence. We know that in Germany, for example, we could have a change in the debt brake, and that could, of course, support the Eurozone. And, of course, the fact that Europe will spend more, should spend more for the European defense, European defense and the NATO. Mr. Trump is asking for 5%. It will not be 5%, but more close to 3%. And that could be some arguments for the European market and especially the CAC 40.
Okay, John, thank you very much. I'm sorry that's all we have time for, but thank you so much for coming to join us this New Year's Eve. John Plassard, the Senior Investment Specialist at Mirabaud, thank you very much for joining us. Plenty more to come this New Year's Eve, still on the programme. This is Bloomberg. This is The Pulse. I'm Anna Edwards in for Francine in London this morning. Now, the investment management firm New Century Advisors is warning that traders and the Fed can't take U.S. labour market resilience for granted. Chief economist, the well-known Claudia Saum, told us more about potential blind spots for the economy in 2025.
If we could keep it as it is right now, largely, this would be another great year ahead of us. We've been surprised at how well the past 2 years have gone, particularly when you think about growth and how the consumers have held up. But that doesn't have to keep going. So what we really want people to focus on are the blind spots, right? What could go wrong? Who isn't getting enough attention? And I think one area, if I had to maybe point some Fed officials to a blind spot, I think they showed a lot of complacency in their last summary of economic projections on how well the labor market would continue to hold up. What we saw them kind of write down, the typical official, was something that basically has the unemployment rate sticking about where it is right now for the next 3 years. That's a pretty remarkable and frankly would be very unusual path to the labor market. And yet there was all kinds of concerns about inflation and the uncertainty around inflation. But I think I'm still concerned that there are things in the labor market, while good, don't quite look like sustainable. And that's where the problems can come in. And so that's one area that I think is still worth watching.
So if I ask which is a bigger risk, a weakening labor market or a stubborn inflation, you're going with the former rather than the latter?
Inflation's fine right now. I mean, we are really not that far from 2%. And we've seen a lot of encouraging signs under the hood that we are getting to this last mile on inflation.
But right now,
the labor
that's
market
before tariffs. That's before we deport millions of workers. That's before Donald Trump comes into office. So things could change drastically after January 20th.
Absolutely. They could change drastically. And I think it's appropriate that we have had a very deep conversation about the policies that have been put on the table. And there have been a lot of policies put on the table. And it's really important to have this conversation and talk about some of their potential pitfalls. And maybe we won't see all of them put into place. And that probably would be a good thing for the economy. And yet, kind of taking for granted the good stuff that we've got going in the economy that's a little more nuts and bolts, like the labor market functioning, and just saying, oh, well, that'll just keep going. That's all fine. It's in a good place. I think that's that could be a real mistake in terms of, because the labor market in particular is always and has been the past few years such a linchpin to this amazing period of a big disinflation. Growth has stayed strong and unemployment has stayed relatively low, and that's something we want to keep going.
That was the New Century Advisors chief economist Claudia Sahm, famous for the Sahm rule, of course, speaking with our colleague Matt Miller. Let's have a quick word on gas prices as we look towards 2025 and we think about inflation. Well, we could need to keep an eye on that story over in the United States with cold weather coming. But certainly in Europe, there's the cold weather to think about. And there's also the potential ending of that crucial Russia-Ukraine gas transit agreement. It's set to come to a close at the end of today. And we're going to talk about that next. Parts of Europe could be facing a cold snap. Plus, we have that geopolitical uncertainty around the Russia-Ukraine gas pipeline. It doesn't carry much of our energy anymore, but still seen as crucial. So we'll continue to watch that and get some analysis. This is Bloomberg. Good morning and welcome to the Pulse. I'm Anna Edwards, in for Francine Lacqua in London this morning. Here are your top stories. Chinese President Xi Jinping says the country's GDP grew around 5% in 2024, signalling the world's second largest economy is on track to meet its official target despite a year of economic uncertainty. The US Treasury Department says it was hacked by a Chinese state-sponsored actor, describing the event as a major cybersecurity incident. China denies the allegations. Plus, Europe is set for a colder than usual January, boosting demand for natural gas, just as the continent confronts the end of a Ukraine-Russia pipeline transit deal. Let's stay with that story, in fact, around European gas. Parts of Europe could be set for a colder than usual January, boosting demand for natural gas. It comes as the Ukraine-Russia pipeline transit agreement is set to expire today. Bloomberg's Anna Shreyevskaya joins us now with details. So what's the most likely outcome when it comes to this Ukraine-Russia transit agreement? It takes some gas from Russia to parts of Europe, to Slovakia, to Hungary. We don't use as much in Europe of Russian gas as we used to, but there is some reliance on it. So that's why we focus on on whether we'll get a renewed agreement here on this transit deal. What does it look like?
With just a few hours left until the 1st of January, it does look increasingly likely that gas will stop. Also, we've heard from political leaders in Ukraine and Russia last week that a new deal is unlikely to happen. There are a lot of complexities around it, and Ukraine has said it will not allow Russian gas flowing by its territory next year, and it will not allow any alternative deal that would still benefit Russia, unless there is any last-minute political intervention, which at the moment looks unlikely. The market is preparing for a halt in gas supplies as soon as the transit deal expires next morning.
Yes, but Anna, put it in perspective for us, because this is, 5% of European gas consumption, is that right? And we do have other sources in Europe.
Yes, indeed, it's about 5% of European gas demand. And to be fair, there is also another pipeline from Russia called Turkstream that supplies Hungary and Serbia, but it does not supply Slovakia, which is why one of the countries which is still reliant on the gas from the east and is pushing for continuation of the flows. Also, of course, Europe also uses LNG from the global markets and also Norwegian gas. And it still has a lot of gas in storage. Of course, this winter it will survive. But the more gas it uses over the winter, especially it's going to be cold next month, the harder it will be to replenish the inventories of the summer for the next heating season. So that's the challenges ahead for next year.
Yes, and tell us a bit about the gas reserves that we have in Europe, because I understand that we're depleting them more quickly than usual, but it doesn't feel as if it's been that cold up until now, and now we're seeing warnings about cold weather in January, Anna. So what's the storage situation in Europe?
Indeed, the storage levels are 73% full at the moment. They were much higher last year, and usually they're high at this point of time. November was also quite cold, and now we are looking into a colder January. The month is going to be less windy, according to a forecast for now. So that means that we might have increased need for gas, not only for heating needs, but also for power generation, and that may deplete gas storage even faster. So the market will be watching the levels, how quickly they drop by the end of March, when officially the new campaign starts. And at the moment, we see the curve on the prices. The prices are quite elevated into next year, so it might be expensive to replenish these inventories and to buy cargoes as well of LNG, for example, as we know that global outages may affect the prices as well. And it's a global market, and competition can arise from Asia or from Egypt or from anywhere else. So that's what, in terms of the prices and competition for available supply at Europe awaits next year.
Yes, and I know they're not hugely connected, these international gas markets, but through that export of LNG from the United States, you wonder if any of that push up higher in US prices makes it across the Atlantic. Anna, thank you very much for bringing us that update. Anna Shirovskaya joining us there with the latest on gas globally and that global conversation. Let's go to Asia now for the next part of this morning's reporting. Lawyers for South Korea's impeached president, Yoon Suk-yeol, say a warrant issued for his arrest is illegal. He's under criminal probe for insurrection allegations, and if the warrant is executed, he would be the first sitting president in South Korea's history to be arrested. Bloomberg's Daniel Tenkate is with us for more. Dan, it's unclear if investigators will be able to actually bring the president into custody, will be able to exercise that warrant and have him arrested. What are the likely next steps then in this tense, evolving political crisis?
Yeah, that's right. This has never happened before in South Korea, and it's unclear exactly how they're going to proceed. This is a criminal process that's running parallel to a political process. He's already been impeached, and now the Constitutional Court is going to decide over the next several months whether he gets kicked out of office. But along with that, you have this investigation, this criminal investigation into him for insurrection, and that's what they're seeking to arrest him on. And there's going to be a showdown over the next week. We're not exactly sure whether they'll be able to execute that arrest warrant.
Right, so we watch to see if they can actually execute it and whether he is actually taken into custody. Now, as the political turmoil deepens, and this goes back to early January, that's just compounded by having to deal with a sort of national tragedy, the aftermath of the Jeju air flight crash that took place on Sunday. It killed, of course, all but 2 of the 181 people who were on board the aircraft. What's the latest in that investigation, Dan?
Yeah, investigators are still trying to piece together exactly what happened. They know that a bird strike of some sort was likely involved here. What's confusing and perplexing is the fact that the landing gear did not deploy as you would expect. They said that could happen if you lose 2 engines instead of 1. That's a bit unclear if that happened. The flaps were also down, so the plane came in at a very high speed, and then it hit a concrete barrier at the end of the runway, which is also becoming an issue, kind of questions arising as to why that was there. Normally airports wouldn't have that sort of hard barrier at the end of a runway, which led to the extreme lethality we saw from this particular incident.
Yeah, absolutely. We're looking at some of those live pictures coming to us from South Korea right now. Dan, thank you very much. Thanks for bringing us the update. Bloomberg's Asia Economics and Government Executive Editor Daniel Tenkate with the latest on the politics and the involving investigation into that plane crash. Now let's get to more of our top stories this morning. US stock markets will close on January 9th to observe a national day of mourning for former President Jimmy Carter. The closures are part of a long-standing American tradition in which financial institutions halt operations following the death of a president. Carter died on December 29th at the age of 100 and was the longest living US president in history. US President-elect Donald Trump has endorsed Speaker Mike Johnson, avoiding a potentially crippling leadership fight in the House. Johnson also earned the backing of Elon Musk, who has become a close advisor, of course, to President-elect Trump. The House is set to hold its vote for Speaker on January the 3rd. The company which owns football star Lionel Messi's real estate properties has carried out an IPO. The listing on a small digital-only Spanish exchange values the portfolio at 223 million euros. The firm owns 7 hotels, commercial real estate for shops and offices, as well as houses. Let's have a quick look at US futures then, and they've actually turned around a little bit from just half an hour ago. So they were in the red. Now we see them a little more positive, up around 0.25% as we edge towards the start of US trading. Nasdaq futures up by 0.4%. A quick look at some other assets. It's been a very good year for gold. Bitcoin also has had a pretty decent year, but you can see not reaching that 100,000 level as we approach the end of the year. The Bloomberg dollar index fairly flat. Oil prices seeing a little bit of upside. Coming up, we dig into the stalled global luxury goods market and what to expect from that sector going into 2025. Will the Chinese consumer step up for the luxury goods sector? How will that all play out for Paris-listed stocks? That's next. This is Bloomberg. Welcome back. This is The Pulse. I'm Anna Edwards in London. It is New Year's Eve, so let's find an excuse to talk about luxury stocks, shall we? Some luxury brands could see an earnings boost in the second half of next year as demand rebuilds, led by a US recovery and dollar strength, and improved spending in Europe and regions outside of Asia. Deborah Aitken from Bloomberg Intelligence joins us with more details. So I think that's your outlook then for 2025, Deborah, and some of the drivers that you see. But looking back to 2024, did the boost that we expected to see in the second half of the year, did that happen?
No, it didn't. We started quite promising in the first half of the year, and the expectation from the biggest companies out there drew for a normalized growth rate of around 4 to 5% in 2024. Due to the second half disappointment, we're likely to come in nearer to flat. Some brands, some companies down maybe 2 to 3% within that, so disappointing overall.
So disappointing overall for 2024. And what about 2025? I mentioned some of the drivers that might lead to something of a recovery for the sector, whether they come from the Chinese consumer, the US consumer, or maybe just FX effects. What do you look ahead to?
Yeah, we're looking for 5 to 6% sales growth overall for 2025. We do say it will be second half weighted, and similarly for earnings too, because we do have additional drag from some currency translation. We're waiting for that stimulus package to come in through China. There's also the expectation that we need to hit probably summer months before we see some of the further travel retail recovery in there too. There are difficult areas, there are hotspots. We expect fine and high-end, fine fragrances, fine jewellery, high-end to do very, very well. Some of those estimates for names like Hermes, Bruno Cucinelli are still looking at double-digit growth, and for that to be more stabilised first half, second half through 2025. For other big names, LVMH back to mid-single-digit growth. And, for LVMH, it's actually, I was looking at some numbers as before coming on, and we actually have seen its sales increase by 60% since 2019. So these companies have faced very big growth rates, 23 over 24. And that has also suppressed what's happened in terms of the growth that they've been reporting through 24. So more of a normalized growth 25 and a little bit more two half weighted.
Deborah, thank you very much. Bloomberg Intelligence Global Luxury Senior Analyst Deborah Aitken with a look back at 24 and a look ahead to 2025 when it comes to the luxury sector. US futures then a little more buoyant than they were just 45 minutes ago or so. We're up by 0.4% now on Nasdaq futures. Here in Europe, energy stocks, the best performing sector. That sector up by 0.6%. Food, beverage and tobacco is pretty flat, but all of the sectors in Europe are in positive territory. Coming up, Manchester United are on a dreadful run of results with their new manager saying it's possible the club could even be in a relegation battle. More from our interview from earlier this year with the club's co-owner, Jim Ratcliffe. That's next. This is Bloomberg. Welcome back. Now, Jim Ratcliffe made his fortune as the founder of the petrochemicals giant Ineos. In a rare interview earlier this summer, he spoke with Bloomberg's Francine Lacqua about the stake he has in Manchester United Football Club and how he intends to return it to the top of European football.
I think Real Madrid have done a fabulous job, really, to be honest. There's an interesting statistic which compares Real Madrid with Manchester United. If you look at the 10 or 11 seasons since Alex Ferguson and David Gill was the CEO. They retired at the same, or they left at the same time. During that period of time, Manchester United's net spend on players, so that's players they bought less the income from players that they've sold, is £1.1 billion. So United have not been mean with the chequebook. They've actually spent an awful lot of money. Real Madrid over that same period of time is only £200 million, which is surprising when you hear that, because today they have a squad where 6 or 7 players are valued over 100 million euros, and Manchester United doesn't have any players that are valued at 100 million euros or more. And Real Madrid have built probably the finest football ground in the world, using the same chequebook, because for the 900 million that they've improved over United, they've managed to build the new Bernabeu. So if you compare and contrast that to those two sets of statistics, you can see that the quality of management at Real Madrid has been better than the quality of management at Manchester United, and the consequence is you finish up with a great squad and a great ground.
But so would you be ready to spend, that amount of money for an Mbappe-like player for Man United?
Well, you have to look at the balance sheet to start with, and I don't think the solution is to buy an Mbappe. We're more grassroots than just one player isn't to solve the problem at Manchester United, really. I think the first thing you need to do is, you need to build a balanced squad, and we need to make progress with the squad. And ultimately, maybe you top it off with a player or one or two players like Mbappe, but it's not the solution today.
So you want to redevelop, of course, the stadium.
Yeah.
Wembley of the North. Are you looking for outside private money? Does it involve sovereign wealth funds? Where are we in those stages?
Well, I think it's more about the regeneration of southern Manchester, really, because the area of southern Manchester is a really I think it's an area of historical significance in the sense that that's where the Industrial Revolution began and settled at the beginning in the sort of late 1700s, and that really is sort of a fundamental change in the way humans have existed, because before manufacturing it was we had a fairly rural existence, and the reason Old Trafford was built where it was built was because the workers, when they left their factories, they could walk to the ground. There's no public transport, So Old Trafford is in the middle of where the Industrial Revolution began, and it's all part of the set. Manchester United is 150 years old in 2028. It's an old club. It's one of the oldest clubs in the world. But I mean, that area today is fairly run down. Mm-hmm. So it's an area of historical significance, and in the centre of it, it's got the Manchester United football ground. Everybody in the world knows of Manchester because of Manchester United. It's Manchester United like Coca-Cola, isn't it? Everybody knows. But, I'm not sure I know why, but it's a fact. If you go to Africa, you go to Asia, you go anywhere in Asia or around the world, they all are familiar with Manchester.
Sir Jim, have you had discussions with private investors ready to put money in the project?
If you regenerate that south side of Manchester, it has to be a government initiative because it's too big an area and it's too big a project. But a regeneration project needs to have a sort of an economic nucleus. And otherwise you're just building housing estates. If you look at Barcelona, 5 million people a year come to the museum at Barcelona Football Club, So you would have an economic nucleus because Manchester United is the biggest football club in the world. Millions of people come every year to look around the facilities, and you would build museums and fan zones and all that type of stuff. If you look at Wembley now, if you look at the new Wembley, which Norman Foster built in London, and you look at the surrounding area, it's full of new developments, which have come in because of that. So, yeah, it would involve public money, it would involve our money, and it would involve private money, because you'd need people to come in, and maybe you'd build, a new part of the university, you'd new health and well-being, build a museum, you'd build the ground, you'd build all the hotels and housing facilities and transportation systems and all that type of thing. So it'd be quite a large project.
How do you see the chemical industry, actually, in Europe? Chemical industry. What does it mean for INEOS? Is there, again, I don't know how a Labour government, I don't know if you've spoken to Sir Keir about how a Labour government...
There's not much chemical industry left in the UK. No, it's finished. Chemical industry in the UK is pretty much finished, really, unfortunately. I don't think the government ever really recognised the importance of that. It's an enormous industry worldwide. But if you look at petrochemicals in Europe, it's about the same size as automotive. It's a really big industry, and similarly in America. I mean, in Europe, I think trillion euro industry, chemicals and petrochemicals. Right. It's about the same size as the car industry, but there's very little left in the UK now. So, I mean, if you look at the UK, if you go back 25 years, 30 years ago, manufacturing in the UK was about the same level as Germany, about 25% of GDP. Germany's still 22 or 23% because it's got a government which has been focused on maintaining a healthy manufacturing base in Germany. But in the UK now, we're maybe 8% of GDP from 25% 30 years ago. So manufacturing is one of the reasons you had these powerhouse of the North, and those types of initiatives, because the North is a manufacturing base, but it's pretty much all gone, and I think it's probably too late now.
Jim Ratcliffe, founder of petrochemicals giant INEOS, speaking to Bloomberg earlier this year, speaking to Francine Lacqua about a host of subjects from football to the chemicals industry. Now, Elon Musk has gained unprecedented power after helping bankroll Donald Trump's political campaign. Bloomberg News' Matt Goldman looks at how Musk's new role as the arbiter of government efficiency opens up glaring conflicts of interest.
In a dramatic political comeback, Donald Trump will return to the White House. And if he's going to share the credit for his victory with anyone, it's this guy.
Where is he? Come on up here, Elon. Come here.
Elon Musk, known for selling cars, making rockets, became one of the biggest political donors in American history.
This is like a mutually beneficial business arrangement, right? Trump got money and got elected. Musk gets sway over the federal government.
This mutually beneficial arrangement includes a new role for Musk that raises a whole host of potential conflicts.
I think the funniest name is DOG, the Doge, Department of Government Efficiency.
Musk wants the federal government to mostly get out of his way. Tesla is a electric car company, and it very much would like the federal government to approve its business in robotaxis, driverless cars.
While pushing for less federal oversight, Musk also stands to gain billions.
Elon Musk owns a major defense contractor. It's called SpaceX. The U.S. government is their most important client. He would like as many more contracts as possible, and would like a president who would say, create a new Mars program and hire him to send the rockets up.
This is Trump 2.0. Like the sort of old rules of conflicts of interest may be out the window here.
You can watch the full documentary on The Terminal on Bloomberg.com or on the Originals YouTube channel. That is it from us here on The Pulse. Happy New Year, everybody. This is Bloomberg.